right, everyone. Good evening. Trust you are doing fine. Welcome to day 5 of our 7 days free Forex trading class. Okay. So over day 3 and day 4, we're able to discuss basic market structure, advanced market structure, and liquidity. Okay. So today we're going to be looking at points of interest. Okay, what is point of interest all about? Okay. Now, a point of interest in trading, okay, as the name implies, POI. When you hear POI, this point of interest, one is referring to, okay, POI. POI. Okay, it is point of interest. It's point of interest. Let's move on, okay? Now, a point of interest is actually a key price level in the chart where a trader expects a significant reaction, okay? It is a key price level where a trader would expect a significant reaction. Okay? It is where you're going to be expecting markets to do something from, market to react from. Okay? That is what a point of interest is. That is what a point of interest is. It's a key level in the market where a trader expects some sort of reaction. Okay? Some sort of reaction. That is what a point of interest. Yes. So now there are many types of there are many types or kinds of points of interest. Okay. We have breaker blocks, we have order blocks. Okay. The most common happens to be order blocks. Okay. We have other type of blocks, mitigation blocks, rejection blocks. Okay, that one you're going to know more about it in the main classes, the main mentorship. Okay. So today we're just going to be dealing with the most common one. Okay. Even the one that helped me catch this trade here. Okay, this trade happened today. This was today, about I think within 3 to 4 p.m. That was when this trade occurred. Okay. Now the type of block that helped me catch this, or the type of points of interest here, was what I call order block. Okay, what I spoke of in the first class. Okay, so we're going to be building more on it. We're going to be building more on it. Okay. Then I told you an order block in its simple definition, okay, or in its simplest definition, another block is the last opposite candle before the start of a new move or before the start of an impulsive push in the opposite direction, okay? The last opposite candle. Good. That is another block in a simple text, okay? In a simple text. It's also a place where institutions set their orders, okay? It's a place with an astounding amount of limit orders, causing large reactions in the market when market price levels reach these areas, okay? So in this trade now, we have an order block. Yeah, I'm going to be showing you one particular type of order block that works very well in the market, okay? I'll be showing you one particular type of order block as we move on, okay? But now we do have two types of order block. We have the bullish order block and the bearish order block, okay? I showed you both of them in day 1. So for this trade, the order block here is actually a bullish order block, okay? It's a bullish order block. Now, what happened in this trade? Remember I told you guys, first of all, in our trades, we're going to be looking out to see our sweep of liquidity, where price sweeps liquidity. Price moving up, okay, to give a break of structure, pulling back down to give us an inducement, another break of structure. That is for the type A advanced market structure. Return back to the POI and buy. That is exactly what happened here. It's not really clear here, but let's do that on let's do it on the 1 minute time frame. Let's see how clear it is on the 1 minute time frame. Okay, it should be very, very clear on the 1 minute view of things. Good. Now, if you look at this place, before price started moving up impulsively, we have the last opposite candle. Okay? My buy candles, my bullish candles are blue. So the last opposite one should be what? Black. So you map out that candle. Look at it. It's this small last candle here. That was what I mapped out. Okay. when you map out this candle, the potential order block. Now, where did your sweep of liquidity occur? This is it happening right here. Okay, price decided to start buying from here, but swept it out. Look at it. That is our sweep of liquidity sitting right here. As simple as that. And now, where's our first break of structure? Look at it. Let's use this. Price broke this high. Okay. And what happened? It pulled back in. Okay. Went to pull back in to give us what? Our inducement. Okay. Our trap. And what happened? Price broke structure again, making this a type A setup. Can you see the second break of structure? Confirming that this move is valid. And what happened? We mapped out that place that we mapped out, that price will come back and touch. And when it touched, we will buy from. What happened? Price came back to touch it. And when price touched it, what happened? See how far it started moving. Okay. This is a 1 to 15 trade. Okay. I showed a picture of this trade. Showed a picture of this trade. I used the prop account for this trade. So I didn't even I closed the trade around here. Close the trade not that far. Close the trade around here. Okay. Close the trade. Not I didn't take it up to this point. My team and my inner circle took this trade up to this point. I closed it here for a reason. Okay. So this trade alone, I won't call the amount he gave, but it's very, very decent amount. Okay. So putting all these whole confluences together, you can see how well the other block works. Okay. So look at it on the bigger picture. This is on the 5 minutes view. Okay. So as simple as that, we knew our order block. We saw our order block. What helped us validate it? It had sweep of liquidity. What other thing? It had break of structure. What other thing helped us again? The second break of structure. Another thing that helped us, our inducement, that pullback. Okay. And what happened? We saw everything. Price did what? Came, tapped on it, and left. This is a 1 to 15 trade. When I say 1 to 15 risk to reward ratio, I mean whatever you were risking for the trade, as it had hit our target, would have made times 15 of it. Times 15. So if you were risking $10 for this trade, you would have made times 15, which is $150. If you were risking 20,000 naira on this trade, you would have made times 15, which is about 300,000 naira. If you were risking $1,000 on this trade, you would have made $15,000 on it. Okay, so as simple as that. Okay, that is it. So just this little concept, just this little thing helped us to bag money of the market. That is why you should not joke with this concept. I have been teaching all through from day 1, day 2, day 3. Okay, or down to day 5. Okay, down to day 5. That is why you should not joke with these concepts. Okay, things are going to help you. As simple as they are the simplest, but they matter a lot. You can use just this trading knowledge to cough out a lot from the market. Okay, as simple as that. Let's see. I should have more trades. I use this kind of knowledge to rake out of the market. Let's see if we would see some of my old trades that I was able to pick out from the market with similar trading idea. Okay, this one is a different trading idea entirely. You don't really find much of those trades on gold. You won't find much on gold. Okay, if I'm a gold barely uses this thing on higher time frame. Let's look at Ethereum. Let's look at that Ethereum. Ethereum I caught, I think day 2 or day 3. Look at this Ethereum. See, imagine I held the Ethereum and I went holding Ethereum to this low point here. I made almost times 14, but still cool, sure. Money made was still decent. 1 to 9, which is still very, very much okay. Okay, now let's look at this Ethereum, okay, with that same concept. Now, what is happening? We saw our point of interest here, okay? And what was it? An order block. So what happened? Before price started pushing down impulsively, selling, what happened? We look for the last opposite candle. So the last buy candle was this blue candle. We put a rectangle and map it. When we mapped it out, what was backing that thing? First of all, we need to look for sweep of liquidity. Where was it? Price swept liquidity, this zone here. Okay, price swept liquidity. And what happened? Let's review. Price broke structure, one. Good. Can you see the first break of structure? What happened again? Price returned back to give us inducements. Can you see? That is our liquidity backing up this trade. Liquidity is key to backing up the trade. But the market does not sweep out money by setting traps. There's no money that the market is going to give back to you, okay? It makes your own setup or your own trade a low probability trade, okay? And then you have the second break of structure. Look at it here. Remember, I told you can still go on to be seeing more break of structures. Look at them. But that two is already enough for a type A. So this is a type A trade, okay? This is a type A trade, okay? Although he came back to engineer liquidity here, which backs the setup more. And look at what happened. When price reached back that our point of interest, that our order block, what happened? Can you see that it started moving down massively? It started selling massively. Now, I know some of you are going to be asking or thinking, then what then will make people hit SL? What then will make people hit SL if this thing is simple? Number one, sometimes that trade they hit SL on might not have sweep of liquidity. Just that little thing, that sweep of liquidity backing this order block that the trade doesn't have might cause the trade to fail, okay? Number two, maybe the trade does not have an inducement, okay? There's no valid pullback into the zone. That thing alone is very, very big enough to cause someone to lose that trade, okay, and lose money on that trade. So you need to get all these criteria right and good, okay? You need to get them, a perfect break of structure, a perfect inducement, perfect sweep of liquidity, a good order block, okay? Sometimes maybe they did not map their order block out well. Imagine someone coming, let me show you a common mistake, okay? Someone will now come here. This is an impulsive move, but look at what happened. There's another one above here. So this one above here is still much more strong and valid. Price has not tapped it to use it. So until price tap here to use it now, before you make it weak. So some people will come and select this one here. And let's see what will happen to them. Can you see? They would have hit SL. The SL, imagine they entered like this. Can you see what happened? Price broke through it. They would have cleared in loss. Meanwhile, they were wrong. Why? Because they did not pick the right one. Where was the right one? Still above, okay? Where was the right one? Still up here, okay? So you need to look out. Is there any very, very strong and valid POI above here? So people who fall for traps, the people who use this other one here as their point of interest and get stopped out, it is their money that is going to be given back to you who was patient enough and careful enough to use the right one. As simple as that. That is why I said liquidity is trap, okay? The trap, the market said, okay? It's just a trap, market said. As simple as that. Now, let me teach you a type of order block, okay? Type of order block, very, very strong and common type of order block. I've taught it on my YouTube before, but let me bring it and teach you guys, okay? Now, this order block is called the Morning Star order block, okay? The Morning Star, okay? Morning Star, not morning as in that, but morning, okay? The Morning Star order block, okay? So when I say order block, this is it. Order and the block for building. So this is the Morning Star order block. Now, how does this Morning Star order block come about? You have a formation of 3 candlesticks, okay? Just 3 candlesticks. For bullish, you have bullish Morning Star, bearish Morning Star. Good. Okay. Some people choose to call it evening star and all that, but I do call both of them morning star. So this is the formation of this order blocks setting. It's very great type of order block. Very strong. Okay, it is seen in pairs, like mostly USD pairs. That is pairs that obey United States dollar. I think I caught one on gold, like I think last week, using this Morningstar order block. I can remember. I caught one on gold, if I'm not mistaken. Caught one on gold, but let's see. Let's see. I'm trying to get the whole joins and patterns all right, so I won't make a mistake while teaching you, or you don't get confused. Okay, so this is going to be red to signify a bearish market stage, and this will be green to signify a bullish market. Good. Bullish candle, sorry. Great. So now this order block is formed with 3 candles. And how does it work? This last opposite candle, remember, this is your last opposite candle. This is your last opposite candle. So when you see this formation of candles, look at something unique. The wick of this candle here, can you see it swept this one? So it entirely swept the lowest point of this candle. This is the lowest point. Let me use a marker indicator. Okay, this wick of here, lowest point of here, swept out the lowest point of here. Can you see? So it first has to sweep it out. Okay, good. And then you now have the green candle covering, sometimes it covers the 2. Okay, so there are 2 occasions whereby one, it covers these 2 candles. Okay, it closes, this body covers these 2, or the body does not, it covers this smaller one but does not cover this big one. So depending on the 2, there are ways to map them out. Good. So if it covers both of them, you start mapping out from here and map out everything like this. Okay, and where should your stop loss be? Your stop loss should be placed just below. Come on, let me change this to black so some people will not be confused. Your stop loss will be placed just below, just a little below here. Okay, price will not invalidate it. Okay, just a little below here. But if that is, I want you to get what I'm saying. How you map out your order block should be based on how this candle body is. If it covers both of this, your order block should be mapped out from here. Okay, so just as it is now on my screen, the order block should be mapped out like this. Okay, should be mapped out like this. But if it is like this, just covers 1 but not the 2, that one it covers, that little one it covers should be how you will map it out. Okay, so you map it out like this, as simple as that. Okay, remember I said the order block normally is the last opposite candle, but in this case for Morningstar, depending on where this one covers, you can map 2 out. Okay, so you only map 2 out when this bullish move covers the 2. Okay, do you understand what I'm saying? If you understand, make use of the comment section. Okay, do you understand? Make use of the comment section. Do you understand? Okay, someone says she does not understand. Okay. Okay, let's restart the Morningstar order block. I'm sure it's probably the mapping out and everything. Okay, let's restart it. Let's redraw it. Okay. Now, for a bullish Morningstar order block, some say they don't understand, but don't worry, for the sake of them, we can't leave them behind. Let's quickly do something concerning it, okay? Now we are greeted with this, and this. Okay, let's make it this one. Let's make this one this way. So we would have the two examples on chat directly. Good. Okay. Now you understand the candlesticks formation, right? You understand that. You do understand the way the candlestick good. Good, good, good. For the third one. Good. Okay, let's make it visible. These lines on it are the wicks of the candle. Remember, the candlestick has body and wick, okay? Body and wick. Wick signifies that the candlestick, this particular candlestick, once went around this region. Okay, body signifies where it opened and closed, okay? Good. So now, how does it work? The morning star order block, okay, for the bullish morning star, okay, but this is a buy scenario, good. You have two red candles, okay, or two bearish candles, followed by a green candle, okay. Now, where you are going to map out your order block, or map out as your POI, good, where you are going to map out as your point of interest, depends on where this green candle close, or how many candles this green candle cover. If this green candle covers the whole two before it, the whole two before it, you will map it out from the beginning of this one to the end of it like this. This is now your POI. So price will come back and touch it, okay? You map it out. So price will do whatever he wants to do, play, come back and touch it. So you extend it just the way I extended those POI, price dance, give break of structure, inducement, came back, touch it and left. But if this green one closes or covers just one, okay, covers just one. In this case now, this green one does not cover the two, but just one. Just one. It is that one you would now map out as simple as this. As simple as ABCD. So price would now, what price would do now is to go forward, break structure, come back, give its inducement, blah, 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 and still return back to the place, tap it, and continue going, giving you your profit. Okay, as simple as that. Now, do you understand? Do you get the concept and the mapping out of it now? Do you get it? Do you get it? Good, 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 good. That's nice. All right. So let's look out for the morning star order block in chart. I think I have some trades that might have used the morning star order block lately. I think I had one on gold. Let us see. I think I had one on gold. I think it was Sunday, Monday or so. Let's find it. If we'll be so lucky to see it, okay? Let's see. This is my second gold chart. Great, I've seen two already. I've seen two already, and the two held well. Great. Yeah. Let us feast. Good. So first of all, can you guys see that we have two other blocks, okay? This Sorry, I said two other block. I'm very, very sorry for that. We have two bearish candlesticks, okay? Two sell candlesticks, okay? Good. And this blue one, the buy on, look at it. It did not cover the two entirely because it did not cover, where is my enlarger? Because it did not cover the wick of this one. Can you see? Had it been this candle, did something like this, covered till this whole point. We covered till this up like this. You will say it covered the wick. But it did not. It did not. Okay? It did not at all. So let's move. Let's move on. Which means that it covered only just one completely. And what would that mean? I will map just that one out. That is why I mapped just one out. Can you see it? I mapped it out. Okay? I'm supposed to have mapped the whole thing like that. But I just mapped just one part of it. Okay? Just map just one part of it, but I was meant to map this whole part. It's for a reason though. Let's know, but let's move on. Okay, it's supposed to be like this. And what the price do? Remember, I told you put your stop loss just below it. Okay. And what happened? Price came and tapped on it ASAP. As price tapped on it, what happened? Total moving in my favor. This is 1 to 4. So it means whatever I'm doing, I'm getting times 4. So risking $10 on this, I'm making $40 times 4. Okay. So you can see it hit my target. My take profit was hit. Money was made from this trade. As simple as that. Okay? So you can see. Let's see the second place where this one it was more clear here. It was more clear here. Forget this cell. Let me remove this cell first. So you won't be confused with it and start asking. Now, look at these three candlesticks. Can you see that the middle one swept the liquidity? Good. This buy candle now, all the gra it did not close above this, but at least it overshadowed this first one, but did not overshadow the second one, right? Good. Meaning I would have to pick only the one it overshadowed, and I picked it. What happened? Price did what he wants to do, came back. This trade now, it gave us one break of structure only. But what happened when he was coming back? Can you see engineer liquidity? So this is a type C, okay? So price came back, tapped on it, and what happened? Served us. This is a 1 to 10 now. So whatever I'm risking, I'm making times 10 of it. Times 10.8, almost 11. Okay. So let's call it times 11. So if I was risking a 10, I'm making 110. As simple as that. So just this basic knowledge, you can see what you'll be able to make out of the chart. Just this basic knowledge. You don't need to be reading thousands of books. You don't need to be doing thousands of books, this, that, this, that, this, that. Just little and the right knowledge, okay? So I believe I've shared with you guys. Let me reset this thing I took. Cool. All right. I believe I have shared with you guys, okay, a very, very, very profitable trading, what is it called? Very, very profitable trading module, okay? A very profitable trading module. This particular trade now hits loss for a particular reason. It will react, but it was wrong, and I was wrong somewhere, okay? I was wrong somewhere in this trade. Remember I told you guys, once price has already tapped and used your point of interest, you will hardly tap on it and use it. The second time it comes back to tap it, it will not use it and give you target. Remember I mentioned that, okay? So that is what happened here. Price used my point of interest here. Okay, price used my point of interest the first time. Look at it. It tapped on it and went. So the second time it tapped on it, it doesn't have that much power to go far because it has already gone far. The first time it tapped on it. So that is why this trade was lost. Okay. So there are some features to enable you from losing when you know that you are taking something. You are just risking something that is of low probability. Okay, even the morning star occurred here. Now let's see how it occurred. Let's narrow it down to this. Let's look at these candles. Can you see that we have this candle? Okay, we have two sell candles, and the buy candle just covers one, but not the two. Okay, so this one that it covers, we mapped it out, and what happened? Price came and tapped it here. See, it tapped it and went up. Okay, good. So you need to know your onion. Okay, you need to know your thing. It had already used it. That is why on this second trial, it didn't really, it reacted, but didn't really give us our target and turned back. Okay, didn't give us our target and turned back. So you can only lose when there's something wrong. And what was wrong here? It's because it had reacted before. Okay, so when you lose, you not only cry, but find out what went wrong. Okay, what went wrong? I missed this trade here. I missed the trade here. This is a very, very good trade though. I missed it because it didn't follow my rules. I didn't get a good sweep of liquidity. So I could not take it. That's why I didn't even map it. I missed that trade there. It's simple as that, okay? Simple as that. So all right, we're gonna call it a night, okay? I'm gonna call it a night. We're gonna call it a night. We're gonna call it a night, okay? I believe you guys understood, okay? Or is there any question? Is there anyone with any discrepancy? Let's give 2 minutes to that. Let's give 2 minutes to that. Anyone that did not or does not understand anything, just make mention. Say, okay, I don't understand this, don't understand that. Let me revisit it within 2 minutes for you. The time is going, so please be fast with that, okay? Or if you're shy to ask your question, you can come to my no. If I say come to my DM, most of you will flood my DM and disturb my DM. Some of you love disturbing my DM. Well, cool, Sha. You disturb my DM after watching recorded session, but they will not come to class. Somebody said he wants me to recap. Don't worry, the recorded session will be dropped, okay? And for the morning star, when this video is posted on YouTube, go over my YouTube videos, okay? You're gonna see a video particularly made for this morning star. I think when I'm dropping the link of this video, I will drop that one too, okay? So you go and watch the two of them. With those two, you would understand, okay? You would understand everything. I broke it down, everything on that video, okay? Broke everything down. So that would do. That would do. All right then. Good night, everybody. Do well to complete your registration with my brokers if you haven't, okay? Do well to complete your registrations with them. Good night.